Welcome to today's market report.
The dollar rose and Treasury yields jumped on Wednesday ahead of a speech in 2 days by Federal Reserve Chair Jerome Powell that may affirm the US central bank's aggressive policy to tame inflation or signal a pivot to subdued interest rate hikes. US and European shares gained in choppy trade as investors tried to divine whether the Fed was more likely to slow rate hikes or stay aggressive until it brings inflation down to its target of 2%. Yields on both German and US benchmark 10-year notes rose to 8-week highs. British short-dated government bond yields hit 14-year highs. Soaring energy prices in Europe raised fears of more inflation in Germany and Britain. When the 10-year yields climb above 3%, all of a sudden stocks have a harder time. We saw that in May, we saw that in June, we're seeing it again now. That will be a headwind as long as the 10-year remains above 3%. Bets in recent days on how much the Fed will raise rates at its September policy meeting have whipsawed between 50 to 75 basis points. Traders of Fed funds futures are last priced in a 60.5% chance that the Fed will raise rates by 75 basis points next month and a 39.5% probability of a 50 basis point increase. The market is gyrating between this ultra hawkish view and this ultra dovish view. The Dow Jones closed up 0.18%, the S&P gained 0.29% and the Nasdaq advanced 0.41%. The Pan-European Stock 600 index closed up 0.16%. The euro fell to a 2-decade low before edging up 0.05% to $0.9972. The dollar index rose 0.037%. The GBP-USD pair is indicating a volatility squeeze as the asset is auctioning in an extremely narrow range between 117.57 to 118.38 after a pullback from a 2-year low.
This is today's market news. Thanks for listening. We'll see you next time.